We've come to the end of another trading week with US and European news once again dominating the headlines. But what about next week? Joining me now is Mike van Dulken, the head of research at Accendo Markets in London. Thank you for joining me, Mike. Now, what should market participants be keeping a close eye on next week in terms of upcoming events and fundamental releases?
It's a fairly busy week in store for the markets next week. We've got the Troika's back in Athens to talk to Greece to deal with the talks on the new bailout deal, and with recent talk of progress regarding private sector involvement on pretty shaky ground. And despite the focus shifting more to Italy and Spain, news surrounding Greece is still pretty key, given its influence on the crisis and/or recovery sentiments. There's a barrage of economic data on the sidelines as well. There's lots of debt redemptions, which are likely to have an impact on the euro. We've got some debt auctions as well. And data-wise, we've got things like UK inflation, UK house prices, Eurozone inflation, and a fair bit from the US as well.
As you just mentioned, we will see inflation figures from the UK and the Eurozone. Now, what kind of figures are you expecting to see?
We don't actually forecast figures ourselves. However, I'm expecting the UK inflation to have eased maybe a touch from last month, following the same pattern as last month, but nonetheless it's still to remain pretty elevated. I mean, food, petrol and clothing will help pull inflation back last month from 5% in the UK, but there's potential maybe for a touch more, but it's still going to remain in a region which is pretty difficult for consumers to deal with. In Europe, we had the flash CPI figure for December was 2.8%, which fell from 3 in November. Expect a pretty similar figure to the flash, to be honest. I mean, input costs, we're starting to see them affect a little bit less, but they're still very high. So consumers are still weathering high costs versus static earnings.
In terms of developments out of Europe, the market is not really expecting EU leaders to produce any concrete solutions to solving the debt crisis for the next few months at least. So in your opinion, what do you think will be done, or shall I say needs to be done, to calm market tension in the meantime?
I think the main thing that the markets are still reacting to comments from politicians, and those comments need to be very carefully worded. I mean, we had a nice break over the festive period where there was very little of that, but we're now back with what's likely to become the endless schedule of meetings and summits. And press conferences after these meetings and summits need to be pretty clear to avoid the excessive market volatility, and above all to show that there is a bit of decisiveness around. We've just seen that leaked treaty change come out, which looks to be a bit more favourable towards the UK. We saw Cameron veto, and he was criticised for that. But now it looks as if there may be a few more people on his side. We've got the summit at the end of the month, which will likely see the normal big build-up in hype, because of course this will be the one that solves everything. And then we've got the finance ministers actually meeting the week prior. So austerity looks to be going in the right direction. But we know there is evidence that people are expecting Greece to potentially be in a worse state. So you've got the two ends of the spectrum really, and I still see the Greek thing coming back pretty regularly on the PSI front.
The US also has some important data coming out. We saw the release of the Beige Book this week. But what's your view on the current state of the US economy, and what is your outlook for the US economy as we head on through 2012?
Yeah, I mean, the US looks to be weathering things a bit better than the Eurozone. I mean, the crisis has affected it, but data-wise, it looks to be doing a bit better. I mean, the recent data has been okay. Employment seems to be up and down. It was pretty good last week with the non-farms. It doesn't look to be getting any worse. Housing data looks okay as well. It's not all doom and gloom. Some people are even asking if it's a case for decoupling between the US and the Eurozone, but we do need something to look at in terms of decoupling, given that emerging markets can't quite be relied upon as much as before. So we've got updates on all those three fronts next week: employment, construction, housing, to give a bit more clarity on the US. But as always, Europe remains the overriding theme, and it's always in a position to spoil the party should it take a turn for the worst, which remains a real possibility.
Thank you very much, Mike. That's a very interesting comment to end on there. Now stay tuned for more Target and Focus, press reviews and plenty more exclusive interviews next week on Dulken TV. Goodbye for now.